All right, Senor Ortiz, we are live. One more time. You ready to do this, brother?
I sure am. Let's do it, man.
Let's do it.
Welcome to the AdminisTraders podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
Hey, what it do, KTTV? This is KT, and I'm coming at you live with another episode of the AdminisTraders podcast. And I have my co-host in the building, Senor Ortiz. What it do, Senor?
Hey, woo. Man, I'm glad to be here. Glad everybody can hear me today, and I'm glad. Man, we missed y'all, man. We missed y'all.
Look, man, been out in the hustle. What we said, we had a holiday in between. We had a few things going on, technical difficulties on the last one. Look, man, we are back in the building. Money was made today. Some money was lost today. And then, NVIDIA. God damn. But on the good note, Tesla showed up today, brother. And so I don't know if anybody out there was playing the stocks, but if y'all missed that Tesla, man, y'all better get ready because it's looking like the bear is starting to wake up a little bit, baby. Hibernation could be over. So, brother, just checking in before we get things started tonight, man. How you been doing since our last episode?
Man, I got some good rest. Got, did another 5K, so yeah, we're good to go. Trying to keep things, good with that. Trying to just, man, it's a blessing, man. Blessing to be here.
Look, man, when did you do the 5K and where was the race?
Man, I did the rodeo run Saturday.
Woo! Look. So now,
season.
So now you did the not the half marathon as usual.
No, I did the half marathon, the Conoco, back in January.
Yeah.
And now this weekend.
Oh, the rodeo run, not the damn. Look, bro.
Yeah.
So, come on, man. That boy T is a runner now, bro. Get somebody out here, bro.
Got one the Saturday before, or the Saturday to kick off spring break, man. I'm gonna do the Kalachi run.
The Kalachi run?
Yeah.
Bro, tell me at the end they got kolaches. Please tell me at the end. Oh, hey, man, look, how do I get signed up for this, man? I'm trying to get out of your bag. This is it. That's what's up, brother. Man, I'll tell you, as far as on my end, everything has been good. Been hustling and bustling with the channel. We got Tapsy this week coming up, so I'll be broadcasting live from there. So getting all the merch together, getting all the books together. I got to take this thing down and pack it up into the bag and get it ready for the backdrop for the conference. Yeah, man, it's about to be a whole lot of crazy things, man. But look, this is what we live for, brother. This is what we live for, man. So now, let's talk about that market, man. What you been doing in that market, brother?
Man, I tell you what, though. Wow, NVIDIA didn't quite plan out the way I wanted it to because I didn't have any. I was going to, but if you know what we've been talking about, once that NVIDIA hit with all the pressure that we had going on for a couple of days, couple of weeks, of people getting out and people selling. All that selling pressure finally burst when NVIDIA cranked them earnings, and the market was on fire for a day and a half. And
fire!
To the list, watching out for them SPY calls, and them AMD calls. You made some money, and so
look, man, I will say my name. Just call me Jack. Be nimble. Because I was able to get in on that NVIDIA. Now, don't get me wrong. I spent a few dollars. I did spend a few dollars. I think the call was about $1,900. It was $1,900. So I spent the $1,900 on the call. Call ran all the way up to 26. Boop. Sold that time. All right. So because I was very afraid of the earnings. So once the earnings came, I looked at that thing running right back up. I say, the next day it came in and I probably got in right in the middle, rolled it up probably about 10 to 15 more dollars. And what did I do again? Boop, sold. And so I am on my third NVIDIA run. But this one don't look too promising, brother. As we look in the heat map today, we're gonna see a few things going on, y'all, that just kind of didn't rub me the right way today. So we got a few things to talk about, man. So I guess without further ado, man, let's jump into some news. Because on the other side, we got a few things that ran today. So let's talk about it. All right, what I wanted to share in the news. Wait a minute, y'all. Let me get this screen together so I can kind of preface it. Woo! Okay. This is what I want to talk about today, y'all. Crypto. If you don't know, Coinbase today. Let's see if can I pull up Coinbase? Let me see if I can pull this up, y'all. I might have to share two screens. But if you look today, let me switch this screen out because I want us to take a look at this Coinbase here. I might as well just go with a trading view, y'all. Let's go to trading view. And then let's take a look at this because people think I'm crazy. Hey, for real, man. You know we'll be back today, man. We going in that thing today. So let's look over this Coinbase. And first, I'll preface this with the story. No, you know what? I think I got to preface this with the stock. So let's look at the stock itself. Let's see how we can find this stock. Let's look at that first. Okay. Can you see that, Jose?
I sure can.
All right, y'all. For everybody that's watching, for anybody that's watching, let's take a look at this Coinbase today. Woo! If you look over here, Coinbase went up today around $27.96. 16.85. 16.85%. Where were you when Coinbase went up 16%? I was in. I don't know about y'all, but I was in the game today. And so let's talk about now, as we look at the stock, as we look at what's happening up here, as we look at what's happening down here, let's see what happened and why Coinbase went out its noodle today. All right, so now let's go back up, and I want to share a little bit of this with y'all. So cryptocurrencies rallied sharply on Monday, according to the Motley Fool. Bitcoin traded over 53,000 for the first time since November 2021. That deserves air horns just for the people who got in at $100. Whoever those people are, I don't know where y'all at, but y'all probably somewhere not listening to this because y'all already paid $53,000. As we know, Coinbase went up a little while ago. What was this? 2021. It went up. Was that when it went almost up to 60,000?
Mm-hmm.
Yeah. So when you think about 53,000 and how long we've been hovering over 51,000, today was very important on the moves, right? And so what it said is by doing this, Coinbase pulled the entire, Bitcoin pulled the entire market. So even bigger moves took place in Ethereum. So with the Ethereum, I'm kind of worried, y'all, because it's 3,000 right now. So man, are we missing the boat? Should we all have some Ethereum in our back pocket right now, Jose?
I'm mixed on, the whole Ethereum, Bitcoin, only because of the price. And and like we've been talking about when you talk about shares, if you don't, one share of Ethereum may not make you rich. But it all depends on how much money you can afford to put in. And if it jumps up, 100% and doubles, and you had, $200, $300 in there, you just doubled your money.
Just double your money.
I think exposure to Bitcoin and Ethereum is good. I just think people have to be careful when they think about how much money they'll make, because unless you go in there and spend $20,000 and buy 10 or, whatever Ethereums, because if one Ethereum became 1 Bitcoin, you would have 50K in your pocket if you spent $3,000 today. $3,000 today. So you nibble on it a little bit over time. But then you also have to think about what realistically, if Ethereum ever made it to $50,000, think about what the price of Bitcoin would have to be. You know,
man, at least got to be over 100.
I don't know, man. I don't know because it's so volatile and so unpredictable. But yeah, a little bit here and there is not bad, you know, $50, $100, you know, and if it moves a little bit, you know, you can double your money. But expect, unless you're buying a whole bunch of it.
Like on that Shiba, you buy 2 million.
Yeah, see that, and those are different because they're, you know, in a minute, you know, I'll talk about a little bit of crypto that I have that has progressed with these two catalysts, you know, running. So,
yes, sir. So, okay, so it says Ethereum 1.70% jumped 8.3% since the close of the market. That's almost 10%. So whatever you put in there, you could have been up at least by 10%. Oh man, my God. So Coinbase 16.84% jumped. Bitcoin miner. So I have also some Mara, MARA, Marathon Digital, no Riot, but they were up 21.7% and 17%. So if you remember Marathon a few weeks ago was down to like $15. And so then after that, it just started waking up and coming along. So I've been kind of riding all of these, but look at where we at. So what's going on now is Ethereum's getting the upgrade. So the blockchain will get an upgrade called DenCon in mid-March that's expected to increase throughput and reduce the cost of the blockchain. This can make the blockchain much more usable for utility, which has always been cryptocurrency's promise. I have a few things that I can only pay using crypto. And so sometimes I got to go in here and I got to buy some, trade it over and blah, blah, blah. So utility it is. But the biggest thing about it, so Grayscale, a digital currency asset management company, has touted that the upgrade as a catalyst for Ethereum long-term. All right, so remember, just think, this could be the next one to be approved for an exchange traded fund. I think I might jump in one of them funds, man. Just see something. Near protocol is up big as well. Man, you know anything about this Near?
I know it's considered a platform kind of like Ethereum and Bitcoin when it comes to its scalability and what it can do when it comes to the utility of the crypto. I don't know a lot about it. Because I want to say it's a good chunk of change. Let me see here, maybe a $10 coin.
Okay.
Yeah, well, it's $4 right now, so
so it's running.
Looking at for some people. You
know, yeah, especially if it's up 8.78%.
Yeah, it was 97 cents a year ago. So
97 cents a year ago, and it's $4 now.
Yeah.
So your 1,000 would have went to 4,000 right now.
It would have.
Wow. Okay, people. Look, let's look and see where we at with this. So now the biggest thing is we just talked about the coins, right? Not the Grayscale, I'm sorry. The Bitcoin and Ethereum. Now it says it should be no surprise that the rise of Bitcoin has led to a jump in the Bitcoin mining stocks. And so, like I said, those are your marathons. Those are your what is that? Riots, right? Yeah. Man, whatever happened to the Canaan or the Canaan?
Man, I don't know.
Hey, dude, I think we lost so much money, man. We're putting on that cash, man. Like, and now it's like $2, right? Oh my God. So look, y'all, but just thinking about these companies not only generate revenue from mining Bitcoin, but Bitcoin is also on their balance sheet. So when you think about those companies right there, don't keep your eyes just on the coins themselves, but just like when we're looking at Tesla, right? Let's look at not only the Tesla, but what are some of the pieces that go into making that Tesla? So not only those Bitcoins themselves, like your Ethereum or your Bitcoin, but also look at how these coins are made or mined. All of these pieces, right, that you want to be able to look at that goes into it. Now they got the ETFs out. So Now let's kind of research those ETFs to see how much Bitcoin are they holding, how much of whatever are they holding, and what does the outlook look for? Because we don't have a lot of data to go back from these ETFs. So we really have to research and look at the outlook for what we got. But we also got to have a little faith in this thing, that this Bitcoin and this whole crypto market is going to keep running for us, because we know they can get stagnant for a few years. Hence what happened before Bitcoin today, which is when the last time it did this, it was November 2020-21, right? So that was a long time ago, you know. So man, anything on that as we close out for the news?
Well, you know, I just want to say that you know, with AI, there is a lot of AI, you know, stocks, and then there's AI crypto. You know, just, you know, if you wanted to do your own research on what are the AI cryptos out there, there are some affordable ones. You know, if you actually are on the Coinbase platform, I would pick up some Rose, ROSE. It's 13 cents right now, and some Graph. It is GRT. It is 29 cents right now. So that's Graph and Rose. If anybody heard me, you know, right when the podcast started, I told everybody I had some FET at 44 cents, 1,000 of them bad boys. I know that's $400, but today it is over $1.10 each. So
Woo!
If you guys, you know, just think about when you're getting into some of these cryptos. I know AI is something that will be around, but the run probably won't. So you got to get in, and if you expect at some point some movement downward in stocks and in crypto. But man, like I said, I'm looking at Rose and Graph right now as two potential buy-ins. There are a lot of good things about both. And so with this AI run and with this crypto run, those two might be some heavy hitters in the future.
Man, that's it, y'all. All right, that'll do it for the news. So stay tuned. Tonight's episode, we are talking all about candlesticks. This is, as we go through the episodes, y'all, we're getting closer and closer to saying, okay, it's time to trade, y'all. But so many people ask me, well, I want to learn about this. I want to learn about this. And I send them straight to the podcast. Well, did you go watch number one? Did you go all the way through? Because we are trying to, I guess the word chronicle, whatever, put it in order, y'all. So what we're trying to do, yeah, that's it, man. From one area that you need to look on, because the biggest thing is people want to start with no knowledge, straight to options. Think it's a little bit in between, because you don't want to blow up that account. You don't want to practice this with your own money, because I will tell you, from looking in my Robinhood when it says lifetime negative 10,000, you don't want to play with your own money, right? So let's make sure that we're using all the tools that we have as we get ready to grow into this thing, and make sure that you are always looking at podcasts or something of the nature to help you get better, because this is a skill that once you get it, like, you can print. Like, you can just go and make money like anywhere, anytime, as long as the market open. But you got to get to that place. And so these are what we're trying to do. So tonight we're talking about candlesticks. Tonight we'll look at our platform probing. And so we've talked about resistance and support in the past. Tonight I want to kind of talk a little bit about the VWAP inside of that. And then we'll kind of break that chart back out that I showed you all in TradingView. And we'll kind of find us some real life resistance and supports on the air while we're doing this thing. So without further ado, let's take us a quick break. When we come back, jumping in with Ortiz, man. Hey, we'll be right back. Man, you ready to do this, brother?
Man, let's do it. Boy, that's good. That's a jam.
Hey, look, man. I had to go and get something in. Like I feel like Steve Harvey. What say when I bring you out? Do I bring you out, dog? All right, man. Look. So tonight, let me get this screen together here. Take off our blockers, candlesticks, Ortiz. Man, break this down for us.
All right. So when we've been talking about charts, the biggest aspect of the chart itself are the patterns. You know, they're candlesticks, they're the wicks. You know, they're the shadows of everything. The open close that dictates everything that comes. You know, everything we talked about, RSI, MACD. It's all comes back to knowing what that candlestick actually is. So let's get started with that tonight. Candlestick is a price chart used, you know, to represent the movement of the asset over a specific period of time. It can be hours, days, weeks, even down to the minute. And it provides, you know, the open, the high, the low, and the close prices for that specific time. Let's say that one more time. The open, which is what it opened at, what was the high, what was the low, and what was the close for those minutes, hours, days, or weeks that you are in particular talking about. So what makes up a candlestick? We got two parts. We got the body of the candle itself, and then we got the wicks and the shadows. The body is going to tell us it's a rectangular part. Now, I know in the charts you've seen the green and the red, long, thick body, you know, those are candlesticks, and they represent the price range from the open and close prices. If the close is higher than the open, the body is usually filled with green, and that usually means that it's heading upward. If the close is lower than the open, then the body is typically empty, or it can be red, which indicates a downward movement. So red is usually for the bearish, for the down, and green candles are usually going up and bullish. And so when it comes to the wicks and the shadows, now, and I'll show you a picture here in a minute of what all this looks like. So the lines coming up from the top and bottom of the body are called the wicks, and some people call them shadows. I've heard them the majority of the time called wicks, and they represent the highest and lowest points during whatever time period you chose. Remember, people pick minutes, hours, days, weeks, whatever that time frame is for you. Those candlesticks, the wicks, are going to be based on those times. The top of the wick, I'm sorry. It's the highest price, while the bottom extends, it will always be the lowest price. So just remember that. The higher it goes is the highest, and then the low part is the lowest that it extended, because it could be a long wick and a short candle, and we'll get into those in the future. All right, so candlesticks provide insights into price action, including trends, reversals, market sentiment. Remember, green candles, and if they're long, they usually come and they usually will give you some sort of bullish movement in your prices. Same thing with those red ones. So just make sure when you start to get familiar with candles, you look at them over those different time frames. So earlier we talked about the 4 parts. So simply put, those 4 parts are the open price, and it's the price in which the stock started trading during the period that is chosen. Remember, the minutes, the time, the hours, days, weeks. The close is the price that the stock ended trading during that same period of time. And the high price is the highest price that it reached during that time. And then your low price is the lowest price reached during that specific time. So your open, your close, your high, and your low price all make up the parts of the candlestick.
Yes, sir.
Now, here we go. And so a bullish candle, see how the difference between the bullish and the bearish, obviously the red and the green. But if you look at the top of the candlestick for the bullish candle, it's got a high and a close. And at the bottom, it's got an open and the low. So conversely, when you look at the bearish one, it's got a high and an open. So it opened higher than where it's at. So the close for that time frame is at the bottom with the low, and that usually indicates bearish sentiment. Again, if you have the high and the close at the top and the open and the low at the bottom, for that trading cycle, for that trading period, and that's the open price. That what the open price means again is the price that it started when you started that time frame. So that's the price that it was. Let's say it was $4. Well, when that time frame is over and it's now $5, that's an indication that it went up and the close is at the top. So we have bullish sentiment. Conversely, if it was 4 at open and then it went down into the close of that candle in that particular time frame was, under $3, then that's bearish sentiment when it comes to that candlestick. So candlesticks alone, one or two, don't make up your patterns. So, but I wanted everyone to get familiar with the actual candlestick and what the candlestick is before we introduce our first pattern. So now we can look at patterns when it comes to the candlesticks. And the first one that I want to open up with is one of the easier ones to recognize and to understand. And it's also, I picked it because it's a bullish or a green or a buy signal, and it is called the morning star. This is a reversal pattern when it comes to technical analysis, and there are 3 candlesticks that form from this pattern when the stock is going down, and then you have your 3 that form that indicate a movement in the upward direction. So here we go. The first candlestick is going to be a large bearish candlestick that indicates strong selling pressure. So the first one is bearish. The first candlestick is bearish. The second candlestick is a smaller one, and it has a smaller body because it opens lower than the previous close, but it closes higher than the previous open. So this indicates that there is weakening of the selling pressure. And when you think of the buying and selling pressure is indicated as weakening when the candlestick becomes smaller and it's going from red to green. Same thing with, when the buying pressure is, weakening, you got a smaller candle. So we have the bigger candles and the smaller candles, and those all indicate some type of buying or selling pressure. And as that pressure becomes weaker and in this particular case, from selling, we start to get a smaller body on the candle. So that leaves our third candlestick. It's going to be a larger one that opens higher than the previous close and closes above the midpoint of the first candlestick's body. When you're looking at it on the chart, you have to see where it is in relation to the other candle. So, like I said, it closes above the midpoint of the first candlestick, not the second one, but the first one, and it confirms the reversal, and indicating that the buying pressure has overwhelmed selling pressure, and now we are in full buy mode. So let's take a look at what that looks like when it comes to the more. Oh, not yet. I'm sorry.
Okay.
Yeah, I thought the picture was next. So the morning star suggests that after a period of decline, the bears are losing strength, and that the bulls are starting to gain control. Now, remember, I look at this because remember, if you reflect back to what we learned before, when you talk about the MACD and the RSI, I always said that I look at stocks that are being oversold. When that RSI is 30 or less, it means that it is oversold. I look at stocks in that way because then I can easily spot a reversal of a downtrend because I've looked at the RSI. I see that we're at 30 or below, or maybe we're creeping up a little bit above 30. But then the candlestick patterns on the chart indicate that the stock has been down, right? Because the RSI is near 30. So there's been a lot of selling. So now when I look at the candlesticks in relation to the RSI and then in relation to the MACD, I will normally see this morning star pattern. which is why I chose this morning star, because when the stock is going down, you can see the downtrend, and then when you have that RSI where it's oversold, you start to get a reversal. So here we go. They look at this, or I look at it, because it's going to indicate, a going from bearish to bullish, like I just said, in relation to your RSI and in relation to your MACD. These are all, things that go together when I look at this morning star. So here we go. Bam. Your red candle is first, your smaller candle, and then you got a green one that's ready to go.
Ready to go, baby.
When you see this on a chart and you plan it out, and then you look at the RSI on where it's at, because that red candle, that first red candle, is still going to be part of that initial downward movement. So it should be the last candle in relation. Then you got the little green, and then you got the bigger green one, and then we should go to the top. So
to the top.
Wrap that up with this picture in an actual pattern. Bam. Do you spot where it's at? You see all those red candles? Bam. And then we got the morning star there at the bottom. That's what you look at when you start to look at, man, is this stock something that I want to get into? So think about that. You put that on the chart with the RSI, you see all the selling that happened in the red, and now we get a reversal there at the bottom. That RSI is pretty close, to being where that oversold is, for that as well. And as if you can see, we had a little bit, we had a gap down from the big red one to the other red one before the other red one went down. So if you look at the fourth candle from the right and compare it all the way to the left where you see the red candle next to the big green candle, that gap, my friends, was filled on the way down. And we'll talk about that later too, one day. But you can see from when it was green to where you see all that red, they ended up almost in the exact same spot before the reversal hit. Pay attention to those when you start to look at the candlesticks. So morning star, 3 candles, a red one, followed by a smaller green one, followed by a larger green one. You compare that with your RSI, you should be oversold at the time. When you look at them together, you see a downward movement followed by those 3 candle patterns, and it's going to reverse. Now, the trick is, what kind of trader are you? Because just because it reverses and it moves up doesn't mean it's going to continue to go up all the way up, all the way up. So you have to think about, is it time to buy? And then when is it time to sell? So
know when to hold them, know when to. Hey, that's pretty much it, man. All right, man. Big shout out to you on Facebook. Hey, look, we appreciate that information. Okay, y'all. So remember, charts are what makes this easier, right? We don't just go in and guess and front run or we like it. When you are day trading and you got thousands of dollars on the line, you can't guess. You can have, I guess you can have a hypothesis, but that's still educated guess, right? That means it still was some thought, it still was some back testing, it still was something that just went into it. I didn't just freestyle and say, well, I looked on the news and they said the Bitcoin was going up, so I'm just gonna buy it and maybe it'll go up. We don't do that because that is guessing, that is front loading. We wait until we see something like over here what we like, and then we pounce, right? We don't just front run. Right. So just when we thinking about these and we talking about these candlestick patterns, eventually we'll be able to kind of explain a little bit more of what this means, a little bit more of what this means and how, and because this one is different from this one. So just understanding all of these pieces, because we have to know what makes this thing move and what does it look like when it's moving, so I can know when do I appropriate those funds. Because if you get in too early, you're gonna get hit with the wham wham, and nobody wants to get. Oh, that ain't the right one, man. I don't even know. That is the wham wham, and then that's usually your account going down to the south. So appreciate that, Ortiz. We look forward to a few more of those candlestick patterns. And what we'll do is next week we'll probably come back with another one because or we may, I would say let's dive deeper into the making of that candlestick, right? Because man, even before we get into the patterns, I want people to just really understand what story did this tell, right? Because remember what he said, the bigger they are, the more of that is going on. So we got little buying right here, less selling, less buying, a whole lot of buying, less selling, right? So now people kind of figuring out what they want, and then we say, oh, it popped. But then look at us, we hitting it down, right? So then the question is, what happened right here? I've been looking on Instagram or maybe there's Twitter, and they will put something up like this, and they say, what would you do next? And then they put the arrow going up, arrow going down, right? So, hey, that's the question. All right, y'all. That is it for the Candlesticks Trade with Ortiz. Let's take us a quick break, and when we come back, now we're going to get into our
you see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the
All right, so get into the heat check, baby. All right, y'all. In our heat check, this is the section where we look at the S&P 500 heat map. We also look at our fear and greed index, and we look at our VIX. Just some more tools as we just got through talking about the patterns and the candlesticks. These are tools that you can use. Remember what I say, we don't try to use these one by one. This is what helps you kind of develop that overall picture. So please don't think we just use these one tools and say this is a wrap. We just try to introduce different tools piece by piece. And so if you go back and look through all of the episodes, we've been dropping information on how to use the fear and greed, how to use the VIX, how to use the S&P 500. So today will be no different. Let's take a look at what we got on our heat map. Woo, my God, y'all, this is rough out here in these streets, man. Oh, man. So, oh my God, I don't even know what to say right now. Okay, y'all, this is our market. Remember what the S&P is, the Standard & Poor's 500 index stocks that are categorized, sorry, whatever, golly, categorized by sectors and industries, right? So these are our sectors. We have technology, we got communication services, consumer defense and healthcare, industrials, real estate, energy, consumer cyclicals, financials, semiconductors, software applications. So many things that are going on in this market, 500 of the world's best companies, and they are interchangeable. So let's take a look at what's going on in our overall market. So the first thing that I see from this, and Jose, I'll let you jump in. But I'm just gonna say the first thing that I see from this is we got a problem, Tech. We got a problem. We got a problem. We look at our Microsoft, it's kind of red. Remember what we say, the redder they are, the worse they are. The greener they are, the better they are, okay? So that's when we look over here, we look at Microsoft. Microsoft today was down 0.68%. Kind of got a maroonish color to it, kind of letting you know I'm not hot yet, but you better pay attention to it, right? And so this is how we look at this tool. If we want to say, okay, where could some opportunities be? Who did not have their best day? I come over here and I say, Microsoft looked a little weak today. Didn't a lot happen, but it looked a little weak. I come over here, I see Apple, I see Oracle, right? I say, all right, so what's going on? But then I get over to Google. And I say, God, you know, y'all know this family, families. I can't just say the word, but look, people, 4.5%. And I will tell you that my account felt all 4.5% today. But what's the thing is, look at our overarching, right? We got our Meta kind of getting a little brownish on us, a little maroonish. Look at our Amazon, right? The same thing that's happening here, people. So this tells me that I'm not worried yet, but I don't want to be here, because when I get here, then I know it's a problem, man. Anything that caught your eyes for dealing with that tech, Jose?
I just think it was the overall sentiment of tech was down today. Kind of, I don't know if I expected it to be like this completely, since last week was a holiday and we did a lot of selling off at the beginning. But I did anticipate a little bit of a sell off today, just because when NVIDIA earnings hit hard last Wednesday, Thursday, or Thursday, Friday, I think that a lot of people made a lot of money because there was a lot of green. And so I expected people to be taking profits. I just, but like you said about Google, they had some bad news with something. So they were down, almost 5%. Back to what you were talking about earlier, what we were saying about all these stocks and when to buy and when to sell. The one thing that no matter how good of a company is, no matter how many shares you have, and no matter how many options you have, the one thing that is the hardest thing to learn is discipline. Because if you are in this world that we're in, and then with your finances, you should always love your finances and love your green days and your money. And I say that to say that never, ever fall in love with a stock and try to hold it and marry it forever. It's one of the hardest things to do. People get caught up with wanting, oh, I love Microsoft. They're a great company. And then they get mad one day when they're red. But you got to get that from the market. You got to expect it to be up and down. If you are in the position to where you are trading and making this money daily, weekly, then that is what you need to worry about. If you are holding it long term, then you got to ride the waves. But if you are in this to make money because time has caught up to you, then you have to remember to sell, buy low, sell high. That's the easiest thing. Buy when it's red, sell when it's green.
Sell when it's green, because we know everything that is red will be back to green. So y'all just hold tight. Now, one thing I want to highlight is Walmart. Walmart. Last week, Walmart was about $170 per share. What Walmart did was a 3-to-1 stock split. So what they said was, our shares are not affordable for the working person because they will spend $2 for one. Let's do a stock split, and then we can make our shares more affordable for the working person who represents Walmart. A lot of stocks do that when they get too high. I know Tesla's done that. Apple has done that because they want people to be able to have access to those shares. Now, during that stock split, nothing about that company changes. The valuation doesn't change. Pretty much the price of the stock, if you put them all back together, it's the stock price is still the same, but they're breaking it down. So Walmart at this time is now $59.60. Let's have a moment of silence for that, because I want that to sink in for you. $59.60. Do we believe Walmart will get back to $100-something? Yes, I do. If you look at the science behind a stock that splits, over the first year after that stock split, it is gone up 10% over that next year of that stock having a split. So I will say, you invest right now, $59.60 per share. You get 10 shares, $596. You let that grow, because history does a lot of predicting in the stock market. What happened on the back trace? What has happened over the years? Wait, and then you got that going up at least 10% where that money is just sitting, right? When you think about APRs, you think about 2%. You think about 0.005% like your bank gonna give you. Or where can you get a 10% annual APR? Where? Right? So when you think about this Walmart, $59.60, now is the time for you to try to get in and get you some. Man, anything you got to add to that?
Do it. Buy some January 2025 calls. Do it.
Hey, see, he was talking about his check. Look, he done jumped all the way in with the options. Don't get me wrong, I did buy 2 leaps today, so I just want to say that. But if you want to just go safe, because look, we got Walmart $59.60. How much is our Costco? $7.45. Costco ain't did no stock split. I want people to see this Target. I can go to the internet and look up Target about 6 to 8 months ago. Target was about $89 to $95. Target is now $150.15. Just think, set it and forget it, right? So my $950 that I would have used to buy 10 of them would now be $1,500. It ain't been that long, y'all, since Target was like that, right? Because they had this whole, maybe that was last year when they had the whole problem with inventory. They said Target had too much inventory on hand. Things were not looking good. What are they going to do? Stock went.
A lot of shrink, people stealing, you know.
Yeah, a lot of those things. Now look at the stock. Look at it now, right? So remember what we said, news affects a lot, but you got to know what's going on. So understanding that this 59.60 is a great buy for Walmart, right? I was thinking Walmart was hitting at 200. Still could be true, but now everybody get a chance. You can get one share of paycheck, right? Just let that thing be or average in. Because look, even today, you would have grew your money by 1.85% just today. That's still more than your bank gonna give you for the entire year, right? So let's go, people. Making sure we getting in. Let's kind of look at a little bit more. Man, look, bro, I put it on my heart to drop jewels tonight, man. So I can't help it, dude. I've been on this thing, dude.
Now, where's that? Man, is our boy Chipotle on here?
Oh yeah, that Chipotle.
Yeah,
man, where is Chipotle?
Yeah, it might be over there above by where that Starbucks is in the middle, maybe. Can't see to the left there, maybe.
Let me see. Okay, this is our Boeing. Oh man, I got stopped out on Boeing. That was terrible. Starbucks, Airbnb. Who is this? Carnival. Those are cruise ships. We got Nike. Man, I'm not. Where's that Chipotle?
Where's that Chipotle?
Look, y'all, we gonna come back and find that Chipotle for y'all. But just understanding, yeah, Lord, I don't know where Chipotle is, but it's on here somewhere. Well, the biggest thing about Chipotle is $2,000 per share, people. $2,000 per share. I've seen Chipotle get down about $1,800, $1,500. So I'm not gonna say we can buy Chipotle just every time we just get ready for it. But hold on, wait a minute now. But they gonna show it to us. Where's Chipotle at? Actually, you shall find. Where happened to it? Oh, bam. There we go, right there. Bam. Hold on, I lost it again. Where was it? Where is it? I swear to God, I thought I seen it.
Yeah, it was.
What's the sector?
CMG, right there. You're right. Yeah, right next to McDonald's.
Okay.
Yeah.
Look, y'all. Chipotle, $2,600. My God, y'all. My God. So every time you think about going in and getting some of that burritos and the fresh, them bowls, $2,600 stock. That didn't happen overnight, y'all, but it got there. So you think about those people who got in. Another one that I was looking at was Kava. You know, you think about the people who maybe we didn't catch this one, but who's coming up next? And so Kava is kind of like our next Chipotle. Will they get to 2,600? I don't know. But I do know that their stock was $40 when they first dropped. Now they are at $52. So that's already been $12 up, right? Over time. So just think that $400 that you will buying 10 of them has now turned into $528 just over time, right? You didn't do nothing but buy them and left them there. So just thinking about what we can do with time. But here, look at Tesla. Just look at it. Just look at it. $199.40 per share. A few weeks ago, y'all, this was $178 per share. So a little while ago, this was prime real estate. More people said they want to see it get over 200 and hold. We here, baby. We are here today. It got over 200. Didn't hold, right? So we still got a few things to go for our people who wanted to get there. But it got up to 199.40 at the day of close. That means I'm starting from there tomorrow. May drop a little bit, but as we look in our platform probing, this is what we want to see when we say what is the next leg for Tesla. All right, man. I think anything else in that, Jose, before we get out of there?
No, that's good, man. Good stuff.
Hey, okay, y'all. Well, I just wanted y'all to make sure y'all be able to come back, kind of check out some of these pieces because the money is there. And so remember, this is not a tool that we solely use, but a tool that we use when we're looking at those markets. I think before we get out, I want to look at one more, and that's coming over here, right? Just thinking about what's going on in the Red Sea, what's going on with our shipping, what's going on. Summertime is coming. We got Chevron, right? Dropped a little bit, but Chevron was $180, right? A few months ago. 154. That could be the buy. I think about Warren Buffett. He just did a few shuffling of his stocks, sold some of his Apple, sold I can't remember. There was another stock he sold, but I do know what he picked up was Chevron. Brother picked up a lot of Chevron. If Warren Buffett picking up the Chevron, you better pay attention. You better pay attention. We got Exxon. So Exxon, we're looking at 104, right? So let's say, for instance, between 100, 104, we're looking at Exxon saying, okay, maybe I can get into this because Exxon will give you a 117 or a 120 run. I was looking at the gas station today as I was stopping getting gas, feeling raped because these prices just handling us so bad. But I was looking at everybody was there, and I was just thinking, y'all just keep on paying me, right? Because we in this. I'd have a lot of Oxy as well because what did all my oil and gas plays I kind of take from Buffett. Buffett bought, I think he owns like 18%, right, of this. He's one of the biggest shareholders there is. 0.75 today was up. We got a lot going on in the Red Sea. So all of those pieces, you think about all the conflict in the Middle East, what's going on with bombing, all of those pieces is playing a part into our energy, oil and gas. So making sure that we have our eyes on this, kind of looking at what our tech is getting ready to do. And then just always being ready for what Tesla gonna do. All right, y'all, that will do it for that piece. Let me get out of there real quick. Now, let's go over to our, let me see what else we got. Man, Jose, I felt the spirit on that one tonight, man. I had to get in there, man. Woo! Okay, fear and greed index. All right, what I want to do, I guess I can click it, right? Bam. This is where we at tonight, y'all. 76. What does that mean? That means we are at extreme greed. That means people saying, I just want money. I don't care what may happen. I just want to get paid. Things could get rough on me, but I ain't worried about that right now. Right now, the reward is outweighing the risk if I can get it. And so that's why you're seeing people buy. 1 week ago, we were over here, which is a little safer, right? When you think about getting ready for NVIDIA earnings, that was a big hold on the market. Soon as that earnings came out, we back over here. Last Friday, we popped back over here for a little bit. We was in the 60s. Come back today, we're back over here. So just please see what it said Friday, extreme greed, right? Extreme greed. So everything was getting crazy. We was right up in here. So please, people, pay attention to all of these tools. I think the last one we'll look at is our VIX. So right now, what people saying is, we're not worried about breaking bread. We'll spend it, buy it. We're going to spend that money. Now, let's come back over here. Anything on this extreme greed or the fear and greed index?
No, I just piggyback off everything you said about them earnings. People were selling in anticipation. So you got to know those market trends of when it's extreme greed, fear, all of that ties together. Because at the end of the day, there are people out there who manipulate this market.
Man, rug pullers, colonizers, man, they will get you. All right, so look, our last piece that we'll look at inside of the heat check, the VIX. So $13. VIX is not too high. That means people are not afraid out here to spend that money, right? The sentiment of the trading in the market says, look, we're not scared, because the VIX tells us, a higher VIX says people are worried about spending their money. Things could drop at any given time. Hold up, shout out Miss Fang. What it do? All right, so people could drop at any given time, but right now, as long as the fear and greed is up, I say this every week. Yeah, but this stays down. Get your money, man. Okay, get your money. Dang. All right, so anything on that VIX before we close that out?
We just got to keep an eye on it, man. And then once it starts creeping up, it might be time to start taking profits.
It's time to start taking. Well, shoot, I'm already taking missing profits. I ain't gonna let tell y'all that. All right, so but he is very, very, very correct in that. So I like to tell people all the time when we look at the fear and greed. So I'll just go through the stages. So buy, right? Like buy. Just regular buy. Okay, you see something looking good, you won't just buy. Neutral, hold. Just hold right now, just chill. Start selling, take your money. It's just that serious, period, right? So buy, super buy. Yes, sir.
Oh, I was gonna say, like Warren Buffett says, be greedy when others are fearful, and be fearful when others are greedy.
Hey, that's it. And if it gets no simpler than that, y'all. All right, that's man. It's 58 minutes already, brother. Man, where did the time go, y'all? We didn't get into any of the platform probing tonight, but that's okay because we dropped a lot of candlesticks, and I tried to lay it all out there in that heat check, y'all. So I hope y'all can go back and get a little bit of that. Pay attention to that Walmart, $59.60. This was $170 a week ago. Making sure you can pay attention, get in, grab you some, go for the long haul, because when everything else is in shambles, we going to Walmart. I don't care if you got to go one at a time. We're going to stand in that line for Wally World, right? So you want to always be on somewhere where you know that it's going to stand the test of time. Walmart is one of those stocks. You just got a good entry point. Go get your money. Jose, 1 minute left before we close out, man. What you got to say?
One thing to say is whether you don't have to be a buyer every day, you don't have to be a seller every day, but you got to be a watcher every day. So just make sure that you know what's happening in the market and in the world of finance, whether that be stock market, crypto. Be a watcher every single day.
What they boys say, you inspect what you expect. Find out where that money is going. All right, y'all, that'll do it for us. AdminisTraders Podcast, another one in the building. I appreciate everybody for coming in, watching us. I hope that you got something from this podcast. We will see you next week.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KT